Okay, and welcome back, students who are taking financial accounting. And in this series of videos, we are going to begin with working on the assigned homework problems from the Digital Study Guide for Chapter 5, the problems for Group B. All right, so note, accounting is about understanding the concepts and then applying that understanding to the situation at hand. If you get the application aspect wrong, that is one thing and is easily remedied by watching someone else work the problem. However, if you don't understand the concepts, that is a whole other thing. Watching a problem worked out will not help you if you don't understand the underlying concepts. Go back and study the text material again and watch the theory videos. You still do not understand the concepts, then either email or telephone an instructor to get help with that understanding. All right, so we're going to work on problem 5-48. It's the first one, and it says here, Top Line Equipment sells handheld engine analyzers to automotive service shops. Top Line started November with an inventory of 95 units that cost a total of 11,400. So started November, which is 11/1. They started with 95 units at 11,400. In the back of my head, I can say, okay, I divide 95 into 11,400, and that gives me my average cost. During the month, Top Line purchased and sold merchandise as follows, just like this. So Top Line Equipment uses LIFO, all right, last in, first out. Cash payments on account totaled 16,300, so that's cash payments on account. Operating expenses for the months were 9,000. And two-thirds paid in cash and the rest accrued as an accounts payable. So if I have operating expenses of 9,000 and two-thirds were paid in cash, that means 6,000 was paid in cash and 3,000 was an accounts payable because it's accrued as an accounts payable. Two-thirds, 9,000 divided by 3 is 3,000. 2 times 3,000 is how I got my 6,000, and then 9,000 less 6,000 gives me my 3,000 right there. Okay, so that's how I, derived that information. Remember, word problems are about direct information. Okay, meaning like this 95 units at 11,400, that's direct information. These here transactions are direct information. You have information that has nothing to do, not applicable to the problem, and I don't know if any of this is not applicable yet. I don't know what's being asked. And then of course we have information that we have to do some kind of math with, and so that's what I'm doing right here is I'm doing the math. Okay, if you don't know to do the math and you kind of like say, well, this information isn't useful, this 9,000 isn't useful, and you get the problem wrong. Okay, all right, so now it says number 1, which inventory method excluding specific unit. So remember, we have specific ID, we have FIFO, we have LIFO, and we have average cost. So, I mean, those you should already, those should be, you should know that, period, at this point in time, if you've worked through any of your other homework problems or you studied the text. Right, so which inventory method excluding specific ID, so we get rid of specific ID, most likely mimics the physical flow. It's asking about the physical flow of the Top Line Equipment's inventory. Now remember, Top Line is using LIFO, but this is asking about the physical flow. So if we look at the information, we start with 95 units and we buy 105 more. And then if we sell 100, okay, we're not thinking about, we're not saying just because they use LIFO, we're trying to decide which one best deals with the physical flow. Well, if I started with 95, I purchase 105, and I sell 100, it would make sense for me to take the oldest first, okay? because you just don't want that old stuff in inventory. You want your inventory valuation to represent current market value. All right. So if I'm going to get rid of the 95 first, then that means I would end up choosing the FIFO method. Okay. Now, top line equipment, yes, they are using the LIFO method, but the physical inventory should follow the FIFO method. Right. Right now, number 2, prepare a perpetual inventory record using LIFO cost for this merchandise. Let me just real quick here. Okay, so if you go back to problem exercise E 5-29B, actually it was 28B did FIFO, 29B does LIFO, and 30B does average cost. Okay. If you want to go back and watch, go to those problems and, watch those. In 28B, I explained the difference between FIFO and LIFO. In 29B, I just strictly did the LIFO method without any explanation other than how to work the problem. And 30, I did the average cost, and you're able to see the differences between FIFO, LIFO, and average cost. I kind of explained that in 30. So we're going to do LIFO here, and so if you need additional help, go back to that particular problem. Okay, so we're going to prepare a perpetual inventory record using this merchandise, and remember we started with 95 units at 11,400. Now I reproduced the transactions here to make this a little bit easier. So on 11/1, here's my purchases, here's my cost of goods sold, and here's my inventory on hand. Okay, and so I have 95 at my total value is 11,400. Okay. So 95 divided into 11,400 is $120 each. Okay. Remember when I was thinking through the problem, I had stopped here, and when I was reading through the problem, I had stopped here and said, okay, 95 units at 11,400. In the back of my head, I could do the math in order to get the cost per unit. Well, right there is where we needed that information. That's why when you're reading, you keep all of the ideas. When you're reading the problem or you're getting the information for the problem, you have to keep all of the whole concept in the back of your head and think about the information as it relates. So some of it you may use, some of it you may not use. And in this case here, I had said 95 into 11,400, even though I didn't do the math. I knew that might have been an aspect of whatever this problem entails, and right there is where it showed up. Okay. All right. So that's our initial inventory, our beginning inventory. So now on November 6th, we're purchasing 105 units at 134, which gives me $14,070. And so now let me do it like this. I don't want to write across the screen. So now my inventory is 95 at 120 because we're using perpetual, and 105 at 14,070. I'm sorry, at 134. Which gives me 14,070, which means we have 745. My total inventory on hand is at that point in time is 25,470. Okay. All right. So now on the 13th, we're going to sell 100 units. Okay. And we're selling them at $280. Okay. Well, that $280 will come into play when I need to make the journal entries for these transactions. Okay. And remember, I mean, I'm going off this list and I'm working down through my perpetual inventory record. The reality is I would have my perpetual inventory record, and on the record I'd have 11.1. Then on 11.6 I would buy 105 at $134, and I'd get an invoice for $14,070. At that time I would actually make the journal entry for it, whatever that entry is going to be. Okay, and then now on 11.13, I'm going to sell 100. Well, I would make the journal entries necessary. Remember, when I sell it for 100, when I sell 100 units, I have to make an entry to record my revenue, and I have to make a second entry in order to take them out of inventory and put them to cost of goods sold. So I would make those two entries on 11.13. All right, I'd make those journal entries, but we're doing this based upon the instructions. It's saying, okay, we're going to create our perpetual record first, and then we're going to create our journal entries, right? So if I'm selling 100 units, okay, and I'm using, remember, we're using the LIFO method, okay, last in are the first ones out. Well, if I'm selling 100 units, which ones are the last ones in? This 105. Okay, so if I take the 100 out, I have 5 remaining. So now my inventory shows 95 at 120, which is 11,400, and 5 at 134, right, which is $670, which gives me 7, 10, 2, $12,070 as my inventory value as of 11/13. Right, so that's that transaction. Now for 11/19, we're going to purchase 150 units at 136, which gives me 20,400. Now the journal entries, for 11/19 are going to should be identical to the ones for the journal entry I make on 11/6 for the purchase. The only difference will be how much, the amounts that we're using. Okay, so if I'm purchasing 150 more, now my inventory looks like this: 95 at 120 gives me 11.4. I have 5 at 134, that's 670. And now I have 150 at 136, which gives me 20,400. So the total value of my inventory is 0, 7, 10, 14, to $32,400. Okay. Again, last in are the first ones out. These were the first ones in from our beginning inventory. Then the next ones are this 5, and now we just added. Think about the refrigerator. If you watched the theory videos, you had an empty refrigerator, you opened it up, you stuck 95 in, closed the door. You open it up, now you have to put in 105 because you bought 105. So you push the 95 to the back and you stick the 105 in front. When you make the sale, you open up the refrigerator. Since we're doing the last ones in, all right, well, which ones were the last ones in? The 105. So we took out the 100. So our 95 are still in the back, and we had 5 that were still in the front. Okay, and we closed the door. Now we open up the refrigerator because we're buying more, so we have to push the 95 further into the back. We have to push those 5 more into the back, and now we put the 150 in front. Right. So when we open up the refrigerator on 11/25, we're going to sell 110 units. Okay. Well, what 110 units are we going to take? Right. We're selling them at 280. So what 110 units are we going to take? Well, which ones were the last ones we put in? This 150. Right. So out of the 150, the ones in the front, we have to take out 110. That means we have 40 left, right? So now our inventory looks like this. 95 at 120, 11,400. 5 at 134, that's 670. And then 40 at 136, So 40 at 136 is 54,400. Yep, sorry, 5440. 5,440. So we have 0, 1, that's 10, 15. Our inventory value was 17,510. Okay, now remember, when we're going to make the journal entries, the entries we made on 11.3 are the same entries we're going to make on 11.25, except the amounts are going to change. It's going to be the same thing for 11.29. Okay, we're going to sell 105 units. Well, when we sell 105 units, what are the last ones? When we open up that refrigerator door, remember 95 were pushed to the back, then the 5 were pushed to the back. Then we stuck in 150, but when we sold the 110, we had to take 110 out of that first group of 150, so now we only have 40 left in that group. Right? So now we have to, we open up the refrigerator door and we have to take out 105. So which ones are we going to take out? The last one's in or the first one's out? So we're going to get rid of 40. So 105 less 40 means we still have to get rid of 65. Well, then what's in the next group? Well, there was that 5, so we have to get rid of those 5. So we still have to get rid of 60. So out of the 95, we're going to get rid of 60, which means we still have 35 left in inventory, right? So our inventory on 11.29 is 35 at 120, which gives me $4,200. So that's my ending inventory on 11.29. And yes, those 35 are the ones that are from our beginning inventory, okay? Because the last one's in or the first one's out, okay? The last one's in meaning, the ones we took out of, 11.19. So our inventory value is 4,200, right? Now, let's see here. It's asking us to journalize all the transactions using LIFO, record the payments on account, and operating expenses on November 30th. Okay, so let me see. Do I want to start a new slide or? Yeah, I'm going to insert a new slide here. Okay, so give me 1 second here while I do this. Okay, so I'm on a new slide. Now realize that let me copy this and stick it here, and that'll guide me because I don't want to be bouncing back and forth so much. I will, but I don't want to confuse things. I'm only going to bounce back and forth just to get the numbers. Okay. All right. Get my pen. Okay. So my first, we had started out with 95 units at a total value of like $11,400, I believe it was, but that's my beginning inventory. I don't need to make an entry for that. So I have to make an entry for these transactions as they occur. So on 11.6, I'm going to purchase 105 units at 134, right? That total amount was this 14,070, right? So I'm purchasing them on account. So I know I'm going to credit my accounts payable for 14,070. That means I have to debit something else, and I'm going to debit my inventory for 14,070. Right, so that's that transaction. Now on 11.13, I'm going to sell 100 units at $280. So 100 units at $280, so 280 times 100, 0.0008, 28,000. Right? Well, if I'm selling those units as an accounts receivable, because remember we're selling them on account, my accounts receivable goes up, so I'm going to debit my accounts receivable for 28,000, and I have to credit something else, and of course that's going to be a sales revenue account for 28,000. And when we make the sale, now we have, remember I had said we have to take out, we took them out of inventory, so we have to adjust our inventory. So our inventory goes down, so I credit my inventory, and the amount of my adjustment to the inventory is, we took 100 and they were at $134. Okay, so we have the 100 at 134. So 100 times 134, 134 times 100 is 13,400. So I'm going to credit my inventory for 13,400, and debits must equal credits, so I'm going to credit my cost of goods sold because that's where I'm moving it to. So I debit cost of goods sold for $13,400. Okay. Now we just did these two transactions. These remaining three are basically the same. All right. We have a purchase and two more sales. So all that matters is how much, what are the amounts. So on 11/19, we're purchasing 150, right, on account. Right. So we're going to credit our accounts payable, and what is that amount? That amount is this 20,400. So this goes relatively quickly. 20,400. So I debit my inventory for 20,400. So that's my entry for 11/19. On 11/25, we're going to credit debit accounts receivable because we're making a sale, and we're going to credit revenue, and we're selling 110. So 280 times $110 gives me 30,800. So I debit my receivables 30,800, credit my revenue 30,800, and of course I have to adjust my inventory. So I'm going to credit my inventory and debit my cost of goods sold. Now we have to figure out how much that amount is. Okay. Well, I have 110 units, and we took them out of this last group of 150 at 136. So I have 110 times 136. So the value of each one was 136, and I'm multiplying that by 110, and that gives me 14,960. So 14,960, and a credit for 14,960. Okay. Let me erase all of this, so I need more space. Okay, and I'll draw a line down the page here. All right, not the best, but so what? So on 11/29, we're selling 105 units, so we're going to have to do the same thing. We're going to debit my accounts receivable and credit my revenue, and the amount is 280 times 105 gives me 29,400. 29,400. 29,400. And of course I have to adjust my inventory, so debit my cost of goods sold and credit my inventory. But now when I go, now remember we're selling 105 units here. Whoops, wrong way. We're selling 105 units. Okay. Now, in selling the 105 units, I have to account for those costs. All right. So I had 40 at 136 times 40. 24, 2, 14. Okay, let me get that right. 0, 24, 2, 12, 14. Oops, 54, 40. Sorry. I have an additional 5 at 134. which is 670. By the way, I'm doing the math up here, but you could have said, okay, that's the value right there, that's the value right there, and then I have an additional 60 at 120. So 120 times 60, 0, 0, 12, 7,200. So now I have to take the 7,200 plus the 5440 plus the 670, and that's 11, 10, 13, 12. $13,310 is the amount, the value of those 105. Okay, so my debit to cost of goods sold is going to be 13,310, and to the inventory is going to be 13,310. Okay, now the instructions also say record the payments on account and the operating expenses on November 30th, right? So it's telling me my cash payments on account total 16,300. So on November 30th, my cash payments on account, all right? Think through the process of making a journal entry. I mean, $16,300 in cash. Am I affecting cash? Yes. Is my cash increasing or decreasing? It's decreasing. So I credit my cash for 16,300, and I have to debit something else. Well, what am I debiting? I'm debiting, it's paying off the on account. So I'm going to debit my accounts payable for the 16,300, right? Then it also tells me that I have to make the entry for this 9,000 here for my expenses. Well, I already explained how I got 6,000 for cash and 3,000 for on account. All right. So my entry to record my expenses is going to be, am I affecting cash? Yes, my cash is decreasing, so I'm going to credit my cash for 3,000. Okay. Then the next thing is, am I affecting accounts payable or accounts receivable? Yes. Well, I'm paying off my accounts I'm buying stuff on account, so I'm going to credit my accounts payable for 6,000, and since debits have to equal credits, I'm going to have to debit something else. Okay, and the solution is calling it operating expenses, and so that would be 9,000. So that my debits of 9,000 equal the total of my credits here. That equals 9,000, right? So that would be my entry. Now they're using the account operating expense. You have to kind of like look at your chart of accounts in order to determine which account best fits for which is best fits what you're using in order to be able to record those expenses. Okay, they didn't break it down into the different aspects of the units. I mean, they're just using one account. Just realize that in the real world, you might have debited several different accounts, okay, not just one account. Like for example, in the hotel industry or restaurant industry, you might have debited cleaning expense, paper expense, and food expense. It all depends. But then again, and that's why I say you have to look at your chart of accounts to see what ledger accounts that you would use. You could just as easily have just one account called operating expense and been happy with that. It all depends upon the business as to how that entry gets made. Okay, so with that said, we're done with that problem. That one, took quite a bit of time because there was a lot involved. Go back and watch the video again if you have to, and I'll see you in the next video for the next problem.